Bitcoin and Ethereum, what's his next move? Let's find out in the charts here, shall we? Oh my goodness, Bitcoin has bounced up out of the gutter and then broken over through the this is huge, massive support, resistance actually, and breaking it, and now treated it back as support, and now it's pumped really high. Now, what's going to happen now? Is it going to continue going higher to our target, or is it going to break back down and retest this? We're going to talk about that and more in today's episode. It's going to be a little bit of a short one because I want to talk about the Conscious Crypto event at the end of the show. Make sure that you participate in that Conscious Crypto event. Links are in the description below. It's going to be an amazing conference, so make sure you're there. Okay, let's head on to the charts. Well, it's crazy, and we're all excited. People are excited, of course, because this dump, right? I remember I said in Twitter, like when Jamie Dimon came out, right? I said this is the clearly the buy the dip moment. Any dip, and yes, thank you, Jamie Dimon, for giving us that little tiny dip when you came out hating, because that obviously turned violently against you, like always, right? Your daughter was thanking you as well, so and so am I. And we saw this once we broke back above this. I knew that this was time to do a trade. I actually got into this trade here right down at this levels. I had like a bunch of like entries, as I knew that these bottoms here were going to get taken out, and so I got in a couple of trades, and we're just waiting to see if this thing's going to roll over and come back down, just to check this level here. So if there's a check of that level, right, we want to be able to pick some up, because most likely we're going to break out higher. Looking at the daily, you can see that we've created a clear cup and handle pattern, which means that this thing's going to break higher, and we can see that that's the case, and we can see that it's going to take us all the way to the target of 70, let's see here, approximately $77,000 around that target. So around 75 is probably a nice take profit zone if you're taking a long-term look at this and trading the longer-term daily time frame. Clearly, this is the time to do so. Okay, so where are you wrong? Because of course, whilst price action is and betting on your market is determinant of a lot of factors, there is a chance that you can be wrong. And so a price is coming back to this trend line and breaking and closing below this would indicate, a 4-hour candle closing below this would indicate that the trend has reversed on us for a little while, and so you might want to exit your trades. I do have some stop losses back down should it come back down here, but I don't see that happening just yet. It's still early on in the stage here. If we go down to the 15-minute, there isn't much to say here. It looks like we're going to just consolidate again, and before we do another run higher. Anything's possible, of course, and then we just have to wait and see. Heading over quickly to Ethereum. Ethereum has also broken out. You can see this trend line. Once it broke this, that was it. It was off to the races. Kaboom! And then it had to come up to this other support level. You can see, resistance level, and you see that it was like, yeah, I'm having trouble here, having trouble, and boom, broke through, and it was like off to the races. So we're talking a target for Ethereum. Like this is another massive cup and handle here, as you can see, or you can do a head and shoulders pattern, whatever you want, an inverted head and shoulders pattern, and you can see this target is like insane here. If we redraw this thing, let's just show the target. We're saying approximately. Let's just make sure that that's the right one. Yes, it is. and you can see the target is you know, an insane like $4,700 level. So look out for that, because that's where Ethereum wants to go here with this massive cup and handle pattern. Looking forward to $4,000 to $4,600 Ethereum. That's going to be amazing. So yeah, I'm happy to be in this space. All right, guys. At the end of this video, I'm going to be showing you a little clip right from Teresa. She's going to show you a little bit about leverage trading. So check that out, and we're going to be talking. If you want to learn how to trade properly, you can join us in this the conference and learn how to trade properly. There will be many different courses that you can learn from. Tickets are below, right? Links to the tickets are below. Check it out. Thank you for being here, and remember, gold, Bitcoin's real. Bitcoin's here to stay, and you need to be a part of it. Cheers.
Hi guys, it's Teresa here from Conscious Crypto Traders. Da Vinci asked me to make this quick video for you guys because there is an advanced concept specifically around how to choose how much leverage you're using on your trades that he and I are both seeing a lot of traders are missing. So I'm actually going to share some slides with you and walk you through the math. So the concept is why increasing your leverage actually makes you less money. My alternate title for this is why experienced traders lower their leverage. So here's a couple of mindset assumptions I want you to check, because these are actually false assumptions. I'm going to walk you through the math to show you why. The first assumption is that higher leverage makes you more money. The second assumption is because the exchange reports higher profit when I increase the leverage, therefore I must be making more money. Now, both of these are actually false assumptions. I'm going to walk you through the math of two individual trades so you can understand what I'm talking about. I call this a tale of two trades. The basic assumptions are we're looking at Bitcoin at $50,000 US, two trades each identical at $10,000, funding fees at 0.5%. This is just an average rate I took every 8 hours because that makes it super easy to do the math and super easy for you to check my math. We're also going to assume the trade's open for 24 hours, so you're going to experience these funding fees 3 times. So we're looking at two different trades then. One is a 40x leverage trade, the other is a 2x leverage trade. So I use these extreme examples so it's easier for you to see this difference. So here's our base assumptions. Bitcoin at 50,000. Your account has $10,000 in it. You're risking 2.5% of your account, which is a common amount that seasoned traders use in terms of what they would risk on every trade. And the size of each trade is going to be $10,000. So you'll notice that the entry points on these trades, the size of the trade, and the amount that you're risking is identical in both these cases up until this point. In the first case, though, with the 40x leverage trade, your margin is going to be $250. In the second trade, your margin is going to be $5,000. In the case of this first trade, you're actually using the liquidation price on your trade as your stop loss. In the second case, you would be putting in a 5% stop loss. So in both cases, this 5% stop loss and this liquidation price will be at the identical place in the market, because in each case, you're taking a $250 risk with this trade. It's just your trade setup is different. In this case, it's a 40x leverage trade with the liquidation price as your stop loss. In this case, it's a 2x leverage trade, and you're using a 5% stop loss to give you the same level of risk. So let's say the price moves $5,000. You would make $1,000 on each of this trade. That's super easy math. Same amount of money, same amount of risk up to this point. Now here's the first difference. The exchange is going to report this profit as 400% profit because the exchange is reporting your profit relative to the margin that you risked. So they're going to report that $1,000 relative to the $250 margin that you risked is a 400% profit. Again, this trade, the exchange is going to report as a 20% profit because they're reporting your profit relative to your margin, and $1,000 profit relative to a $5,000 margin is a 20% profit. The exchange is not taking into account that you really only risked $250 because of your stop loss. So notice that it's the same amount of money, but reported very, very differently in terms of what the exchange is telling you your profit level is. In this case, your funding fees would have been $14.64. In this case, your funding fees would have been $7.50. So your actual profit in this case, relative to the actual amount of money you risked, would be 294% in the 40x leverage trade and 3% higher in the 2x leverage trade. This example gets really exacerbated if you're holding your trades open for longer than a day. So let's say you held this trade open for 2 weeks. So again, everything being the same as in the earlier example, but now over the space of 2 weeks, you would have paid $205 in funding fees on the first trade and $105 in funding fees on the second trade. That's almost a 10% difference in the amount of money you would have made on the low leverage trade. In other words, this low leverage trade would have made you 10% more than the high leverage trade if you were keeping this trade open for 2 weeks. So your actual profit in this case is $100 difference on this small trade. This is a really important advanced concept to understand, because a lot of people tend to default toward the higher leverage, thinking if they can just gut it out and trade with higher leverage, they'll make more money. No, seasoned traders are telling you to lower your leverage because lower leverage makes you more money. We are super excited to have Da Vinci as one of the speakers at our upcoming Conscious Crypto event. Why conscious? Because a lot of you are losing a lot of money by trusting your gut or trusting your instincts, which actually ends up having you go into herd mentality instead of trading effectively as an advanced trader. We're going to be diving into a lot of really advanced concepts at this event, which I think in the long run are going to help you make a lot more money as a trader. This event is a fundraiser. It's helping to pave roads here in our community in Costa Rica. More importantly, this event was created for you guys who really want to dive in to some of the more advanced concepts of crypto investing and crypto trading. We're going to be dealing with a lot of the really deep advanced concepts you need to not only make more crypto, but to hold on to it and not have the tax man take it all. So there's still time to get your tickets. We know you've lost more than this on individual trades, so the link is down below. Invest in yourself. I promise you will make more money back on what you learn as a trader than you've ever paid for this tuition. We look forward to seeing you at the event.